Ready to navigate the tumultuous financial landscape?
Join top analysts like George Gammon and Jim Bianco as they unravel the complexities behind today's market shifts.
With their extensive expertise, we've distilled countless hours of analysis into rapid-fire insights that save you time.
Don't miss out on pivotal shifts affecting the economy that everyone is talking about.
Stay tuned as we dive into expert predictions about the market bubble and the inevitable impact of rising interest rates.
Ready? Let's explore how you can safeguard your investments in these uncertain times.
In our discussion today, we are delving into the debasement trade.
George will address common misconceptions about inflation and what this means for investors.
Many individuals conflate the debasement trade with hyperinflation.
George emphasizes the need for a nuanced understanding of various market conditions.
What are the primary economic indicators highlighted by George?
He mentions that inflation profoundly affects purchasing power and financial decisions.
What strategies can investors implement to counteract currency debasement?
George underscores the importance of diversifying portfolios and choosing assets that can withstand inflation.
What predictions does George make regarding the future effects of debasement?
He anticipates ongoing economic difficulties and highlights the importance of resilient investments.
To conclude, George encourages a reassessment of traditional beliefs regarding inflation and investment.
Indeed, proactive strategies and a commitment to financial education are key to successfully navigate the future.
Today, we will delve into Jim Bianco's insights shared in a conversation with David Lin, focusing on whether the market is facing a significant downturn.
Bianco highlights concerns about the sustainability of current market valuations and the risks posed by rising interest rates.
Bianco points out that high market valuations could indicate an impending correction.
Lin agrees, suggesting that if interest rates rise, the market may face further challenges.
What does Bianco say about interest rate hikes affecting market valuations?
Bianco states that as rates rise, borrowing costs increase, which has historically led to market corrections.
How does Bianco address the role of investor sentiment?
Bianco notes that investor sentiment is crucial, warning that panic selling could result in sudden market declines.
What potential market corrections does Bianco anticipate?
Bianco predicts a downturn could result in declines between 10 and 15% following valuation corrections.
Bianco suggests that successfully navigating market volatility requires strategic foresight.
He emphasizes the importance of diversification and monitoring economic factors in investment decisions.
Today, we're diving into a critical analysis from Professor Richard Werner, shared with host Luke Groman on the concept of Trade War 2.0.
Professor Werner emphasizes how this potential conflict is more than just trade tariffs, touching on systemic economic shifts.
Professor Werner asserts that Trade War 2.0 could disrupt international supply chains in unexpected ways.
Luke Groman points out that this conflict could resonate through not only trade, but also the broader financial landscape.
What insights does Professor Werner provide about supply chain disruptions?
He mentions that sectors such as electronics and pharmaceuticals could face severe shortages.
How might financial markets react to the trade war?
Professor Werner indicates that markets often react with tension, leading to increased volatility.
What does Professor Werner forecast for the economic landscape?
He warns that if Trade War 2.0 escalates, a recession is possible, particularly impacting emerging markets.
In conclusion, Professor Werner stresses the importance of proactive investment strategies, urging diversification to manage risks.
He also highlights the necessity for policymakers to implement strategies that stabilize the financial environment.
Today, we're discussing the housing market through insights provided by Nick Gerli on Adam Taggart's platform.
Nick Gerli warns that indicators suggest the market might be heading towards a deflationary spiral with significant impacts on buyers.
Nick Gerli points out that several economic factors are leading to falling home prices.
He cautions that the housing market's recovery could be slow, raising alarms for home sellers. Nick highlights the influence of rising interest rates, which greatly diminish potential buying power.
This reduced interest can contribute to further declines in housing valuations.
What does Nick Gerli refer to when he mentions the deflationary aspect?
Nick explains that stagnation in the economy can create a downward trend in home values across the market.
What guidance does Nick offer to prospective homeowners?
Nick recommends that potential buyers remain cautious and patient, indicating now may not be the best time to engage.
What does Nick foresee for the housing market in the near future?
Nick anticipates further price declines if existing economic strains persist.
In summation, it's evident that Nick Gerli's perspectives are vital for navigating the current housing landscape.
He stresses the importance of vigilance and adaptability for prospective buyers as economic scenarios change.
In today's analysis, we will discuss the implications of historical market events like Black Monday.
This analysis looks into how past market performances can shape current investment strategies.
The discussion suggests that strong market growth can indeed precede corrections.
Historical data indicates corrections are often linked to shifts in economic indicators.
Historical evidence shows that investor sentiment has a tremendous impact on market downturns.
By analyzing these patterns, we can better anticipate future market activities.
Investor mood significantly affects market trends.
A climate of fear can result in substantial sell-offs, increasing market volatility.
Indicators such as unemployment and inflation are vital in signaling market trends.
Being vigilant about this information can lead to better investment foresight.
Current analyses suggest that market volatility may rise as we approach year-end.
Certain sectors are likely to undergo corrections due to ongoing economic challenges.
In conclusion, keeping a close eye on the market is essential for all investors.
Employing diversification strategies can help reduce risks associated with market corrections.
Today, we're diving into Chris Vermeulen's analysis, highlighting the recent damage done to stock markets and the implications for gold and silver.
Vermeulen points out that the current market conditions may provide an excellent entry point for precious metals as they exhibit signs of strength.
Chris Vermeulen discusses how the stock market is facing notable corrections, with analysts increasingly concerned.
According to Chris, this backdrop is likely to bolster gold and silver prices as investors look for safe havens.
Chris notes that the recent volatility in the stock market has left many investors feeling uneasy.
He suggests that historical patterns imply we might encounter more declines before recovery. Vermeulen highlights bullish indicators for both gold and silver, suggesting a strong upward trend.
He encourages investors to keep a close eye on technical charts for both metals. What does Chris forecast for the future of gold and silver?
According to Chris, he expects gold to surge due to its status as a safe haven amid market uncertainty.
Chris emphasizes how ongoing economic conditions are poised to affect gold prices.
He advises traders to consider hedging their portfolios with gold as uncertainties loom.
Vermeulen concludes that investors should stay alert to market corrections to take advantage of opportunities in gold and silver.
He also advises careful positioning as economic situations change, ensuring readiness for potential rises in precious metal values.
Wow, what a whirlwind of insights we've just experienced.
Indeed. Chris Vermeulen's take on precious metals really stands out in light of the recent turmoil in the stock markets.
And let's not forget Nick Gerli's concerns about a deflationary spiral. It's a tricky landscape for homebuyers.
Absolutely. And Professor Richard Werner's warnings about a potential trade war 2.0 have big implications. It could really reshape things globally.
Then there's Jim Bianco, who brought up rising interest rates being linked to unsustainable valuations. That's a real red flag.
Exactly. And George Gammon had some striking points about focusing on resilient assets to cope with currency debasement.
There's such a rich tapestry of perspectives here, especially regarding the challenges facing our economy.
It sure is. If you found value in these discussions, remember to give us a thumbs up and subscribe.
Your support is invaluable for us to bring you more insights from top experts.
Don't miss out on our next video where we will dive deeper into the dynamics of global finance.
Thanks for watching, and we'll see you next time.